Let's talk some Foot Locker. To help us do that, I want to welcome in TD Ameritrade Network contributor Jenny Horn to the show. Good morning to you, Jenny. Let's talk some Foot Locker. This has been an incredible ride over the last year for this company that had really struggled over the last 3 years, but we're working our way back almost completely, and it's had a little bit of weakness the last 3 sessions, but outside of that, this has been a very, very strong outperformer for the last year.
Absolutely, and this is one of these names that sort of shocks me. I would have sort of said maybe a year or two ago Foot Locker would have been left for dead because it has this brick and mortar exposure. It's, typically in malls, which were sort of a thing of the past. And then you look at the chart of the last year, and they did hit 52-week highs Tuesday, but they're only about $2 off their all-time high of $68 a share back in February of 2019. So that's pretty remarkable. They're actually just right around their all-time highs, given the sort of retail landscape they've been dealt over the last year. Now, they have earnings tomorrow pre-market, and analysts are expecting earnings of about $111 a share, which signals 265% year-over-year growth on revenue of about $1.9 billion, which would signal about 60% year-over-year growth. So this was one of those names that sort of got hammered in the first quarter of 2020, just due to a lot of their stores closures and the fact that they had sort of seen sinking momentum heading into the pandemic. But they also got a price target boost this morning from Morgan Stanley. Morgan Stanley raised their price target to $62 a share from $50. And like you mentioned, Alex, they are seeing some weakness today. They're down over 4% now. And one of the reasons I don't think the stock is seeing a more positive reaction to this analyst call is that their target of $62 a share only implies really a slight upside to Wednesday's closing price of about $61.67 a share. So the analyst did cite that he really likes the revenue and margin forecast going forward, but he warned sort of the theme we're seeing throughout this week in retail that a beat may not be enough for share gains. Positive news for some of these retailers with the economic reopening is sort of already priced in. So other retailers we've seen this week that have reported objectively very strong first quarters aren't really seeing much move to the upside because their valuations are already so high. This was already sort of expected. But there are a lot of good long-term catalysts driving Foot Locker. One being they are sort of expanding what we keep saying with retail, their omni-channel presence. They've invested big in their digital presence. They have a Shop My Store feature now on their website as well as their app. And they also, specifically, I thought this was funny, are seeing really, really strong momentum in their basketball-related footwear right now, which is, of course, topical with the NBA playoffs going on and the Wizards and Pacers playing tonight. Another thing is their international expansion seems to be another tailwind for this company. They're seeing really, really strong growth, specifically in the Asia Pacific region. Now, in terms of headwinds, I think that one headwind is, of course, the stimulus spending is fading. This was a beneficiary of this increased consumer spend, and that is now, fading as we go into these summer months. So that is maybe a near to midterm negative. Another thing is one of Foot Locker's biggest partnerships, which is with Nike, is sort of up for question because back in 2017, Nike sort of unveiled this 5-year plan to sort of trim its partnerships and also, build its DTC platform, which it's done very well. But they reportedly announced plans to stop selling to six accounts, the biggest names of those being DSW and Urban Outfitters. Following last year, they eliminated 9 accounts. So now everyone is sort of worried, will Foot Locker be next? Which brings me to our first tweet of the day, which says, I heard in a convo once that Nike only still wants to have contracts with stores that don't need Nike to survive. So if your store would shut down without Nike or a Jordan product in it, which many would, Nike's pulling out. It's going to get interesting. So while I do understand this fear because these are big names, I mean, Dillard's, Zappos, Urban Outfitters, and the list just goes on and on, Nike's management does pretty regularly call out the importance of some of its select retailers, those being Dick's Sporting Goods, Foot Locker, and Nordstrom. So I would say that this partnership, while it may be dwindling, I don't think it's necessarily going anywhere. But the comparison a lot of people are making on social media this morning is sort of Nike's sneaker app to Foot Locker's app. And, the issues and the loves between both of those apps, which brings me to our next tweet today, which says, good start to the day picking up a pair of Zion 1 from Foot Locker app with no issues. So this was not the only, there were some negative tweets for sure about Foot Locker's app, but I do think this ability to sort of, digitize its business. And typically I think there was a day when you'd only buy shoes in the store. I think those days are gone. And there's also this crazy network of, I think they call themselves sneakerheads. I'm not cool enough to know about this, but people that are willing to spend top dollar on some of these Jordans or Nikes or just very expensive shoes. And I think as long as that exists and as long as sort of this, new generation of, high schoolers keeps buying, and I think as their buying power increases, I think Foot Locker stands to benefit. I mean, my brother is in high school, and I think that the day he starts actually making his own money is a dangerous day for Foot Locker in a good way, Kevin.
You're full disclosure, Jenny and Alex, this isn't a name we look at on a daily and weekly basis. It's not a market barometer, but once a quarter, we investigate this name. And I looked at the chart today, and like you guys, I was amazed at the price action of this stock, because much like I look at other things, Nike is going to direct to consumer, right? And they are such a big part of Foot Locker. And I can't tell you the last time I bought gym shoes or running shoes in a store. I buy them all online. I know my shoe size, and I click, and they're there in 2 days. So it's amazing to me that they're doing so well, but I can't imagine that the future is bright for this company. So I would like to know, how are they doing these numbers? How are they getting people to come in the stores? I get that there's some improvements over the extremely low levels that some people are going back, but I can't imagine that the trend is going in the right direction for Foot Locker, guys.
And you look at it, the stock would argue with that, and I think that it's an interesting conversation,
right,
and one that we're going to have to probably call in some reinforcements for here, Kev. But Jenny, really great setup. We always appreciate it, and we look forward to talking to you again soon. And let's bring in those reinforcements. Let's bring in the co-founder of LikeFolio.com, Landon Swan. Landon, I know you and Andy are basketball guys. If you went back in time and you're back in college or high school and you're trying to think about it, I guess, in the modern time, are you going to a Foot Locker to buy your shoes, or are you just going to Nike.com?
Yeah, well, back in the day, we didn't have Nike.com. We were going to the stores. So, had to try them on and see what fit at that. Back in high school days, or even, middle school, high school, you really didn't know your shoe size because it changed every 3 months, right? I mean, you're growing so fast. So there's a use case for that younger generation having to go in and actually try on things. But I think once you get to the, where you're mature, you're 20-something years old and your foot's done growing, your size, I think Kevin's right. You can just order online. And I think that's kind of the way everything is going, obviously. And with Foot Locker, 75%, I believe 75% of their sales come from Nike. And so it is scary to think of how much power that one company has over Foot Locker. It is enormous for them. And, just with one decision, they could really, really damage this company. But they do a lot of sales. If you do that math the other way and think about how many sales Nike's getting from Foot Locker, then you think, well, maybe they need to keep them. So it's a tough thing to think about, but it is definitely concerning. I can say that, Jenny was very right about the stimulus. That was a huge thing that we saw. In fact, when we look back at the stimulus timing and people talking about specific brands and buying brands, that is probably, Foot Locker is probably the #1 highest correlated with stimulus. So you can see when the 2 stimulus checks went out around May or June of last year, and then not too long ago, stimulus #2, you can see where those are. You've also got the reopening happening right now. The first stimulus had a huge impact on Foot Locker. A ton of people were just saying, all right, I got my free money from the government. I'm going to go buy some new Jordans or whatever it may be at Foot Locker. Tons of people were saying that. And then now the impact is not nearly as much. I think that there is some pent up demand. You got mall shopping at about plus 13% year over year, which, it sounds kind of good. But if you think about where we were at a year ago, only 13% up year over year is kind of embarrassing, really, for malls. So they're getting more traffic as things are opening up, but that's off of a very, very low bar. So Foot Locker is getting more people in the door. They've got the stimulus checks coming in. Our data says this is likely to be a good earnings report. We've got a score of plus 39 out of 100. Could go negative 100 to positive 100. So anything positive is good. So we've got a plus 39 on this one. So we're bullish on this report, but long term, I'm very concerned about this company. If they do pop, this is a short-term trade for me. I am not a long-term investor, but I do like the fact that the stock is off about, what, $7 or $8 in the last 3 days. So if that sets up for lower expectations and the higher likelihood of a potential beat on those low expectations.
Landon, I understand that, the numbers from the from the stimulus are going to hit Foot Locker, and they're going to have their earnings, and that may be why this stock has run like it has. But stocks are forward-looking, and all this stimulus that we're talking about in the next 3 to 6 months is about to run out, right? I mean, they're going to start weaning the American consumer off of pandemic relief. So what does that have to do? So I get the earnings per share will probably be good. I get the revenue will be good, but that third leg, that third head in the three-headed monster that is an earnings release is the guidance going forward. And how are they going to guide when stimulus checks stop showing up in U.S. consumers' pockets? And
yeah,
right,
I agree.
75% Nike? Oh my goodness.
Right, I agree 100%. I would say that this is, I think that you've got reason to think that this could be a good report, but if everyone else is already thinking that and that's already priced in, then there could be no surprise. And that might be why they're selling off so much. Even today, they're down when the markets are bouncing back pretty strong. I think Foot Locker's down about 4% right now, whereas the markets are, up around 1%. And so that's a little concerning. And I would agree 100%. I think that this report has good potential on it, but it may be all baked in. And if you look at where the stock's at, and if you look at where the mentions are, I think long term, the outlook on this company is very sketchy. But you know what? 3 months ago when we came on this show, we talked about Foot Locker. I think I probably said the same thing. I said, I'm worried about Nike. It's a one-legged stool, all that. And you know what? They've killed it since then. So eventually, maybe that leg of that stool gets kicked out. I'm sure the executives are planning for that, and they have to have a backup plan or working on that partnership. But it's a perpetual thing where we're saying, one day it could be really bad for Foot Locker, but as long as that day doesn't come now, we're okay. So it's a tricky situation. I think if you're trading it, you got to be short term on the bullish side. I would be very afraid to, put in a bunch of money in this stock and close the account and not look at it for a while. I would not want to do that. I'd want to only be short-term bullish on this one. And it's really an earnings play for us. I mean, this is plus 39 out of 100 is not super bullish. It's moderately bullish. It's one that I would be willing to trade, but I'm not, nowhere near going all in and definitely not holding past this week.
No, I think that's a really strong takeaway in separating those two things out, because sometimes we talk about earnings as an opportunity to potentially accumulate an investment, maybe selling a put below the market. It doesn't sound like this is the case for something like that. But Landon, as we kind of wrap things up here and say goodbye, you're trying to look out going forward. You said you're not optimistic about this, and this has been the conversation we've had for years now, and it just seems like Foot Locker just keeps being able to do just enough to kind of keep that relationship strong with Nike. Is it as simple as Nike sending out some of the foot size measuring instruments out with an order? Can't they just do something like that slowly over time? The need to go to the store starts slowly becoming something you don't need to do, because how do you undercut the producer of the product? So it's not like they're going to be able to have lower prices than Nike, who's actually producing their own shoes.
I agree. I know. And I'm not in the the sneaker business. I don't know what the ins and outs are. Like, why is it that everyone has to go into the stores once your foot stops growing? Or maybe if you're in high school, like you said, they could mail something out. But I think a lot of it is culture. I think a lot of kids like to go in, get the latest and greatest, look at them, touch them, feel them, all that. Like, it's an experience, and it's a kind of a different world. The sneakerheads, I've got a couple buddies who are into that, and it's a completely different world. And I think that you may have to have that physical element. That may be one thing that the three of us don't understand about that whole world, is that you might have to have that. I will say long term, one thing that we always look at is consumer happiness. Nike's at 61%, Foot Locker's at 46%. So very concerning long term. They may be getting people in the door, but they're not necessarily very happy customers. And so, again, just another reason to not be bullish long term on Foot Locker. But for an earnings trade, I think it's got potential short term.
Good stuff. We'll leave it there. Landon Swan, the co-founder of LikeFolio.com. Thanks for joining us. Look forward to talking to you again soon. All right, Kev, couple